Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hello, everyone, and welcome to Ask Rob and Rob, the show where you get your questions in and we give you our best efforts at an answer. And that format's been running for a lot of episodes now. And it's a popular one. So let's continue that roadshow and remind you how you can get involved and get your very own question answered.
Yep, oh so simple. Give us a call on 013 808 00035 or go to propertyhub.net/ask. Just come up with your question, send it over, and you'll soon have your answer.
Our first question comes in from Himesh.
Hi guys. I own a few flats for which I pay service charge, which includes insurance built into that service charge. Now, I've never paid any extra insurance because I'm guessing that includes the building's insurance and they're unfurnished flats. I'm just wondering from a liability aspect, should I get any alternative and an extra insurance for the flats, bearing in mind that none of the furnishings are mine, they're all the tenants. Thanks for your help. Bye-bye.
Himesh, you're right. With your service charges, buildings insurance should be included. And I'm glad you've mentioned that because not actually a lot of people know that. So not many people are aware that that is included within their service charges. So it's a good knowledge share. Thank you. Beyond that, it is absolutely up to you and it's optional. So you can get more insurance if you require. You can pretty much insure anything these days. The obvious one that sticks out would be landlord's insurance. And not all landlord insurances are created equal. Some will protect contents to a certain level, some will protect more. They normally protect you against people not paying rent and then having to go through an eviction process, again, with different levels of coverage. And some do all the bells and whistles on top as well. I suggest just Googling landlord's insurance, looking at the options out there and make a decision. It's not that expensive, so you may be inclined to take it. It will come down to you and your tolerance to risk. Out of Rob and myself, Rob takes more insurance than I do. Of course, I do insure some things, but it just comes down to how you sleep at night. Will you feel more comfortable with taking some insurance and then make your decision? But it is completely optional. It is up to you. So I suggest do a little bit of research on what options are available to you as landlord's insurance and then decide whether you want to take it or not. But there is no right or wrong answer. It's down to you as the individual and your comfort levels.
Okay, let's hear our next question now from Michelle.
Hi, Rob and Rob. My name's Michelle. My husband and I live in London. We've just started out in expanding our property knowledge very much at the beginning. We've been fortunate enough to be gifted some money, enough for a deposit on a home. I'm on an employer-sponsored visa from Australia, but my husband is a British citizen. In future, we could be living in either country. With this in mind, do you think as a first-time buyer, buy-to-let is a sensible option to explore, or should we start out with a residential mortgage? Thank you.
Michelle, thank you for the question. And this is a tricky one. Obviously, I don't know any more about your situation than you've said in your message. And so I can't really tell you what to do, but can give you a few factors to be thinking about. So one, of course, is going to be how long are you likely to be in the country for? And I appreciate that's not something you're necessarily going to know. But if I was buying a property, whether it's to live in or to let out, I would be looking to do so for at least 5 years, at least. And that's for two reasons. One is who knows what's going to happen with prices in the next 5 years, any 5-year period, not this particular one. So you don't know what price you'll be able to sell it for if you need to sell it in, say, 2 years' time. And secondly, the costs and the taxes involved in transacting in property are so large that you need to be living somewhere or owning somewhere for a reasonable amount of time in order to actually offset those costs and spread them out over that number of years. So if you're not sure you're going to be sticking around for at least that long, then I would not be enthusiastic about buying somewhere to live in. The flip side of that, though, is that it's tricky to get a buy-to-let mortgage when it's your first buy-to-let and you don't own your own home. It's not impossible, but there are far fewer options out there. It's a specialist category as far as lenders are concerned, which means either you'll be unable to get a mortgage on that basis, or the rate that you're paying is going to be higher than the best buys that are around at the time. So if you are interested in the buy-to-let route, then the first thing that I'd do would be to go and speak to a mortgage broker, because they'll be able to tell you what your options are. And that will allow you to either rule that option in or out based on what they tell you before you spend much more time thinking about it. The best option in terms of keeping your options open would be to do what I normally say you should not do, which is to try to find a property that works for both. So if you could find a property that you want to live in that would also work well as a rental property, and you'll be able to figure that out by running the numbers before you buy it, even if you're buying it as your own home, then that gives you the option. So you can move into the property, live there for as long as you want to live there. Then if you do decide to move, you can normally get consent to let. So keep the same mortgage, but get your lender's permission to rent the property out and continue to hold the property even if you're living abroad. Even that, though, it's still not straightforward because, of course, there might be tax considerations. So if you're earning rental income in the UK, but you're also living and earning income in Australia, what does that mean for your tax situation? I have no idea, but it's something that you would need to look into. So I know I'm not giving you much of a steer there, but it is a tricky situation because there's so much uncertainty. So I would say don't rush. I know that when you've suddenly received some money, it can feel like there's a lot of pressure to go and do something with it. We talk a lot on this podcast about inflation and how that's eroding the value of your money, and that's all true. But it's actually even more expensive to make the wrong move and get yourself into a situation that costs quite a lot to unwind. So I would say look into all your options now, do some of the things I've suggested, talk to a mortgage broker, find out what the situation is. But then if you need to wait a bit longer until you've got some clarity about your own plans, then that's okay. Take that time. You're never going to have complete certainty. And at some point, you are just going to have to make a decision based on what you think is likely to happen in the future. But that's not necessarily a decision that you need to make this month if you don't feel like you're ready.
So thank you for your questions and thank you for listening. We'll be back on Thursday with the Property Podcast and, of course, back next week with Ask Rob and Rob. So until then, take care, have fun, bye-bye.
Bye-bye.